Hello and welcome. We have seen the market spike. We've seen both the Nifty and the Sensex surge over 1% in trade, the Sensex surge over 1,000 points, and we have seen markets outperform for the sixth consecutive day. Now, what really are the factors that are leading to these gains, and will this rally continue to last long? Well, to decode all of this, I'm joined by G. Chokalingam, Senior Market Analyst. I'm also joined by Sanchita Mukherjee, Senior Business Economist. Thank you both for your time. Mr. Chokalingam, I'd like to begin by asking you for all those saying that, look, the market has suffered significant losses. We have seen a lot of tariff uncertainty weigh. Of course, reciprocal tariffs still on the radar. Now, of course, we are seeing markets recover for the sixth consecutive day and sharp gains at that. So, what really are the factors that are contributing to these gains?
Yeah. So as you rightly mentioned, market fell significantly. That itself is one of the major reasons for the recovery. Last week we were down almost to 90 lakh crore rupees worth of market cap got eroded. That made a lot of stocks very attractive. And further trigger came from the FIIs. After a long gap, they started buying Indian shares on Thursday and Friday. Not only that, two, three globally reputed investors, they made a institutional investor, they made a very positive statement on India. One investor said they might even bring in $50 billion, like over the next 5 10 years. So another institutional investor said India looks very attractive for investment. So apart from that, the rupee strengthened last week. The gain in the last week was the highest in the last 2 years. That in turn led to increase in the forex reserves. That again hit a 1 month high last Friday. So all these positive developments, triggered these sentiments, and finally, more than 6 lakh new investors registered last week. This also supported the market recovery.
Right. So you're seeing new investors, you're seeing foreign institutional investor return really and interest really coming back to the Indian market. Of course, you're talking about the currency impact as well. So all these factors that you feel are contributing to these gains. But Sanchita, is it also just beyond foreign institutional investors and that interest coming back, and also a depiction of our own domestic fundamentals being very strong as far as our economy and our indicators are concerned? Your thoughts?
Thank you so much, Sakshi, and a very, very valid question, very pertinent indeed, because we have just read, in fact, yesterday, IMF has pointed out how India has increased its GDP from $2.1 trillion economy in 2015 to $4.3 trillion economy in 2025. We are poised to take over Japan in 2025 in GDP growth, and may potentially even take over Germany in 2027. That's the projection. It's almost 105% GDP growth from 2015 to 2025, which is the highest rate. It's an unbelievable rate of GDP growth in the last 10 years. If one were to witness this, China is somewhere close to around 74% GDP growth, the way their economy has expanded. US, of course, leads the world with a $30.3 trillion economy. I think India, being a very diverse economy, and with the focus now on manufacturing, on exports, on keeping our interest rates lower, RBI flushing liquidity into the markets, a very large consuming base of 4 billion, of a huge population consuming. I think all of this is added on to the factor that India is diverse and doing well in all of its sectors.
Right. So that's as far as the economic indicators are concerned. But, G. Chokalingam, for all those saying that, look, is the market rally here to stay? What sectors should we look at in the next few days, few weeks? What would you say?
The best sector is the banking sector. In fact, the banking profits have grown at 22% in the last quarter, which is very impressive as compared to many sectors which are still facing the single digit growth syndrome. I mean, the volume growth is single digit for many sectors. As compared to that, there has been a very robust growth in profits of the banks. And within banks, particularly the PSU banks, have surprisingly they have outperformed the private banks in terms of profit growth. So that is the one segment I would be extremely bullish, and followed by basically the telecom sector, because there the growth is going to be steady and stable for many years to come. These are the two sectors one can consider.
Right, but lastly, for all those saying, okay, is the rally going to stay? And if so, for how long? What would you say?
Yes. Very soon we are going to get a monsoon forecast. So unless there is any bad news on monsoon forecast, the rally would continue. The second risk factor would be uh, if at all Mr. Trump takes up any non-tariff, other than tax-related stringent measures against India's IT exports, uh, then market rally would continue. But there is no tax issues because we don't have any undue tax disadvantage to America against America. But if non-tax related any restrictions, if he brings in, that would be a major risk factor. But I don't see any scope for that because American corporate also would be impacted very badly. Third, let us not forget that in the short span of about 7 8 days, the market has recovered more than 30 lakh crore from the bottom. So naturally, some profit booking can happen if the rally continues. But I am very confident the relative terms, the recovery would remain, and there won't be any further crisis like what we saw in the last 2 months going ahead, particularly for next couple of months or so, or even for 1 or 2 quarters. I don't see any major risk to the market. Some amount of profit booking will come. Again, that can be an opportunity for investment in the short term and the medium term.
All right. Thank you so much for, of course, decoding that for us. Of course, we will continue to track the markets and how the economy is doing. Thank you.